I think I'm gonna go devil's advocate. He'll drop it and he'll drop it by 0.25.
Well, either way, you've got a drop there.
Drop it low, Adrian. Go 0.5.
Woo!
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is Michaela Edwards. And today, OCR predictions.
This is our bread and butter
Yeah.
as the mortgage team here.
If we get this wrong, like, mate, we're in trouble.
We can't get this wrong because I've already been telling people for the last 2 weeks that my prediction is happening.
I do this thing where I'm like, here's what's going to happen. Here's my prediction. If I get it wrong, I'll get you a bottle of wine. And last time I got it right, and I was like, thank the Lord, man. Because
50 bottles of
a
wine
lot of
out the
people,
door.
like it'll be Corbyn's, right? Because I owed that many people that many bottles of wine.
I do think we're probably going to have similar predictions here because we operate in the same space. But
Okay.
what do you think?
Let's do a little bit different. Like, I'll play the devil's advocate for the reason why I think it might not be what you think.
Oh, okay.
All right. So, Michaela, Mortgage Oracle, what is your prediction for the official cash rate announcement on the 27th of November tomorrow?
Right. Let me just channel old Mr. Adrian Orr here. I think it's going to drop.
All right. A very soft prediction there, sitting on the fence. What do you think it's going to drop by? How much?
50 bips.
50 bips. Okay. So a couple of things we've just said in there. One, what is a bip, Michaela?
Ooh, a bip is a basis point.
Yeah. And what percent is a basis point?
0.01%.
Right. So we're effectively going to have 50 of those little bips dropping. So basically, it's going to drop 0.5%, right? The other thing there, who is Adrian Orr?
As a non-Kiwi, I do know who he is, but I would love a history lesson. Can you give me his origin story?
Adrian Orr is the head of the Reserve Bank of New Zealand. He basically is in charge of the official cash rate and controlling inflation, which is his wider mandate. It is not just him anymore. There is a panel or a committee that come up with the official cash rate. The likes on there, I remember like Karen Silk is on there and a couple of others. But generally speaking, Adrian is the face of the Reserve Bank, and he's the one that cops the flack, whether he gets it right or wrong or what people think. So effectively, on the 27th of November, we will have an official cash rate announcement. The official cash rate is basically an interest rate that the Reserve Bank pushes out, and it's what we call a rate that your lender of last resort would give. So it has an influence. It doesn't directly influence, but it has an influence over rates in the economy and the cost of funds in the interbank money market. So basically, what does that boil down to? If we distill that into something that's actually interesting, how expensive is my mortgage going to be? So Michaela has predicted a 50 basis points drop in the official cash rate. That doesn't necessarily mean, though, that your 1-year interest rate or your floating interest rate will drop 50 basis points. And again, that's because the two aren't actually usually directly linked. One just influences the other.
I think that's a thing that a lot of people don't quite understand, because we'll get a lot of questions close to an OCR announcement saying, if it comes down this much, does that mean my rate's coming down this much? And like you said, it's not always directly the same, and it doesn't always happen right away. The day after the announcement, not every bank is going to be changing their rates to reflect that.
Yeah, some not at all. They are hanging on to those margins, baby. What I would say, though, is my counterpoint to that, maybe it will drop. I think it will drop 0.25. I don't think it will go the full 50 basis points because of things that are happening in the global economy, right? At the moment, you've got some pretty big moving and shaking parts. You've got Donald Trump, who was just elected as the president of the States, and that has some really major impacts on the global economy, the cost of funds, and also the expectation of inflation. Some of Donald Trump's kind of headline policies that he's campaigned on have been quite protectionist for the United States, right? So we're going to put a 20% tax on everything, 60% tax on stuff coming from China. What that actually does is create an artificial spike in inflation. I say artificial, it will be real for Americans. But really what that does is that pushes up that fear of global inflation coming back a bit. And you've got to remember that in the past, Adrian Orr has been accused of doing too much too quickly, not doing enough fast enough, a whole lot of things. So I think he might look at some of the more macroeconomic pressure in the, or kind of predictions around the globe and go, you know what? Few wars have popping off in the old Middle East.
That is true.
Traditionally, that can impact oil prices, which is a huge driver of inflation in the global economy. We've got a president coming into the States in Jan-Feb next year that could very well push up inflation again. And you remember, before inflation got between that 1% and 3% band, which is his target that he's got to get it to, he actually started dropping rates early. So if he drops rates by 0.5 and then another 0.5 next year, and inflation is pushed up by things outside of his control, he will get a lot of fingers pointed at him going, you cut stuff too early, and actually you don't know what you're doing. So I think I'm gonna go devil's advocate. He'll drop it, and he'll drop it by 0.25.
Well, either way, you've got to drop there.
Drop it low, Adrian. Go 0.5.
Woo!
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below. So, Michaela, no one wants to hear me waffle on about macroeconomic principles. I know James will be rolling in his grave wherever he is.
The gargle.
What do you think will actually happen for mortgage rates? How is this going to impact Kiwis?
I do think we're going to see a few banks that will drop their rates if it does in fact drop. We did see a few weeks back some of the banks dropping their 1-year rate to 5.59 as a special rate temporarily. And I think we're going to see that come back after this next announcement, which will be really good if your mortgage is coming up. You know, maybe it's already come up and you're sitting on floating because you're waiting for the announcement, or maybe you're one of the lucky ones that comes off just after the announcement, which is just so serendipitous. But I do think there's going to be a little bit of relief there if you are someone that's not currently locked into a term.
Yeah, I think that 1-year rate will be sitting at 5.59, 5.49, absolutely max lower. I'm really interested though in that difference between the 6-month rate and the 1-year rate, because that 6-month rate at the moment, there's too much margin there for it to be attractive. It's priced out of the market, mainly because banks know that the shorter you fix at the moment, the quicker you're going to roll onto those shorter interest rates. So by getting you to fix for longer, they can get a little bit more margin out of you as the cost of money drops in the background, because the bank doesn't actually go, you've locked in for 5 years, we will buy the money for 5 years. A lot of the times they will have shorter maturity funding rates in the background with the expectation, hopefully, that actually as the cost of money drops, you're stuck on this rate here and they're actually getting more margin out of you over time. So yeah, I think the interesting one will actually not be the 1-year rate, 2-year, 3-year, it'll be the 6-month rate. Are we telling people to go back fixing 6 months, 6 months, 6 months, or are we going, your 1 year is still the best?
It'll be interesting to see if that 6-month rate does come down, because as you said, it's been pretty chunky for the last little bit. And the 1-year rate, even after that 5.59 went away, was still looking a lot more attractive to most people than the 6-month rate. So if there's some change there, that will be really good too.
100%. So if you listen to us talk and you think, he doesn't know what he's talking about, he's just a mortgage broker, he's got terrible shoes and a broken finger but a great smile, I'm going to drop in the comments what I think is going to happen. Make sure you leave some comments below to let us know what you think. So thank you for Partners Life for sponsoring the episode. Make sure you rate, review, and subscribe, and get in touch if you want to talk about your mortgages. Cheers.